The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. The S&P 500 is now down 17.1. Let's take a look and see what that means about the 10-year Treasury. That's up 2 basis points, 3.72. We'll talk more about that in just a minute. Mortgage-backed securities down 12 basis points. We'll get into that one as well. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Conforming loans yesterday locked at 6.524, down just a little bit. The 30-year jumbos locked at 6.482, down just a little bit. The 30-year FHA loan locked at 6.511, up a little. USDA loans 6.524, that was up just a fraction. And the best loan on the market, but you got to earn it, the 30-year VA loan 6.31, down 15.7. Down 15.7 basis points. It was down just a little bit yesterday. That's the VA loan, best loan on the market. Those are all OBMMI. That's where we get that information. And it's yesterday's numbers. That doesn't mean you can get them today. In fact, most likely you cannot get them today because, like I said, the mortgage-backed securities are down 12 basis points. That means interest rates are up just a little bit. And we told you yesterday that we were going to see a bit of a problem just because on his way out the door, James Bullard was trying to shake up the markets. He did that yesterday. We told you it was going to happen. We knew it, but we know he only gets to vote one more time. He will have his say at the Fed meetings, but he doesn't get to vote until beyond this next meeting in December. I think it's the 14th. After that, he's not a voting member. He'll still be still the president of the St. Louis Fed, but he's not that particular branch is not a voting member. So we warned about that. The markets did sell off after the comments. He said that the Fed has a ways to go to get restrictive and thinks the Fed needs to raise rates to at least 5.25. Okay, well, it's better than his 7% before. He did not mention that 7% as he did previously. Following his comments, the mortgage bond market went down to almost 40 basis points, but we recovered most of the losses as it was digested throughout the day. Chinese citizens have been protesting the zero COVID policy lockdowns, and to some extent, they are getting a response from the government. Peter Bookvar believes this could be the beginning of the end of China's harsh approach to COVID, and we need to think about what both China and the rest of the world will look like on a full reopening, which we haven't seen since 2019. This could impact oil consumption and inflation. Now, I saw this article yesterday. I don't know if you've seen this. And I'm not a big soccer fan. Are you a soccer fan? So obviously the big story of soccer right now is the World Cup. And apparently when the World Cup is being broadcast into China, they blur the faces of all of the spectators because they don't want the Chinese citizens to realize that they're not wearing masks. Thought that was kind of fascinating right there. So let's go back and continue on with this. New appreciation data, home appreciation. Case-Shiller Home Price Index, which is considered the gold standard for appreciation, showed home prices fell 1% in September, but increased by 10% year over year, which is a decline from the previous reading of 13% in August. Home prices are now down 2.5% from the peak, a far cry from a housing crash of 20 to 30%. To be clear, we anticipate additional softening as the full impact of peak rates were not realized in September. The 10-city and 20-city were down 1.4% and 1.5% respectively, meaning that a lot of losses were concentrated in the bigger cities that were somewhat overheated: Seattle, Denver, San Diego, San Francisco, and Los Angeles. The decreases were milder than the previous report, but wait, don't get too excited about this yet. The FHFA, Federal Housing Finance Agency, released their house price index, which measures home price appreciation on single-family homes with a conforming loan amount. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHFA reported the prices rose 0.1% in September and are up 11% year over year. Based on this, you can interpolate that the decline in Case-Shiller is coming from higher priced homes where there is less demand. So the properties that are not outside that conforming loan limits or high balance limits, those actually rose 0.1% and are now 11% up year over year. So you need to understand that. And if we look from the technical standpoint, well, the bonds are still moving right in the channel that we've expected. And as I shared with you yesterday, I am expecting that we're going to see some improvement in mortgage rates after the inflation numbers come out on Thursday. So we're kind of just standing by right now to make sure that our predictions, our forecasts are accurate. So do I have a crystal ball? Can I guarantee these things? No. All I can do is share guidance that I believe and I get from all kinds of sources all over. So that is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to call 800 306 1990, 800 306 1990.